Banks love secrets, and one of their biggest secrets is that they don't actually have to pass on the RBA's rate drops. Yep, you heard me right. If you buy your first home not knowing this, it could cost you thousands. Today, we're going to blow the lid off how banks actually set your home loan rate, why your repayments might spike even though the cash rate's coming down, and how you can beat them at their own game. But before I do, if you get any value from this video, give us a thumbs up, and if you want more content like this, smash that subscribe button. So what is the cash rate? Let's start with the basics. The cash rate is the interest rate for overnight loans between banks, set by the Reserve Bank of Australia. In other words, it's like the wholesale price of money in our financial system. Banks sometimes need to borrow money from each other to settle their accounts each day, and the cash rate is the interest rate they pay for these short-term loans. The Reserve Bank of Australia sets a target rate, often called the official cash rate, and by using its policy tools, it keeps the market around that target. Why does the Reserve Bank set this rate? Because it's a key part of how Australia's central bank manages the economy. The Reserve Bank Board meets 8 times a year to review the cash rate. If the economy is running hot and inflation is above the Reserve Bank's 2 to 3% target, they can increase the cash rate and make borrowing more expensive. Higher interest costs slow down spending and help bring inflation back down. On the flip side, if the economy is sluggish or unemployment is high, the Reserve Bank might cut the cash rate to encourage more lending and spending to stimulate growth. In short, raising the cash rate acts as a bit of a handbrake on the economy, while cutting it hits the accelerator. The cash rate has a massive influence on interest rates around Australia. It's the benchmark that banks use when they set their own interest rates for products like home loans, savings accounts, and credit cards. When you hear in the news the RBA changed interest rates, it's really the cash rate they're talking about.